At the currencies market, the Naira ended the week firmer against the United States dollar at the interbank foreign exchange market, closing at 160 Naira, 12 Naira to the copper. Now, that was about a 2.1% drop. We saw the Naira earlier in the week on Wednesday to be particular, falling as low as 164 Naira. But then the Central Bank of Nigeria did intervene at the market, saying that it would bar all companies from participating at its bi-weekly auctions to stem the surge in demand. Also today, the Central Bank's Monetary Policy Committee will hold an extraordinary general meeting, and analysts say that they expect that the Central Bank would address the foreign exchange volatility at the market. Now, also, interbank lending rates closed higher at weekend on Friday, closing at around 11.5% on average. Core money closed at 11.75%. Now, for the secured open buyback instruments for the banks and discount houses, we saw rates steadying at around 11.25% on average. As I mentioned earlier, some traders at the currencies markets make it and some don't. And of course, there's always a warning while you trade at the currencies market that it's risky and not suitable for everyone. But then, of course, there are gains to be made. Now, according to Alpari, there's a number of causes for why traders die at the market, as Alpari has put it. Now, Michael, good morning. Thank you for being here. Now, I was a little bit concerned when I saw the #1 cause of death for Forex traders. I was hoping that people don't literally die at the market. Now, just throw more light on that. Why does this happen?
It's not like they die. We're actually looking at the death of the account. You know, if you start trading with, let's say, $10,000 and your account right now is at $2, you're actually dead. It's like going for war. And you know, it's not like every time when you go for war that you die when you lose. There's sometimes that you can no longer fight, you give up. So that means, you know, you're practically dead. You know, so basically, when you trade also, you have a certain capital, and at the current time, you know, you start with 10,000, you're now at $2 or $3, and then you actually lost. Then you're practically dead. So we're looking at what is actually the major reasons why a lot of traders lose their account, lose their total capital in the currencies market.
So, sorry to butt in here. When you say that the trader loses this or this amount, and then does that mean that his account will be wiped out? Does that mean he can't recover or stage a comeback or something?
Well, if he wants to stage a comeback,
recoup losses. If
he wants to stage a comeback, then he needs to get more funds to the account. It's like the bailout thing for the banks that is causing problem worldwide.
Now, I would imagine that, especially for a trader who is just starting out, an amateur trader, let me put it that way, even though he's gotten maybe basic or advanced training, definitely he's still more at risk of failing, if I can use that word, than at succeeding. So, of course, he would need to fall in a couple of times, get himself back up.
Sure. You know, so many times when we talk of traders dying, we're not talking of traders with $200 in their account or $10 or $50. We're looking at people who've actually committed a lot of money to trading and then losing their account.
Over time, or maybe in
sometimes it's not over time. You could actually lose your account in a day or two, depending on what you're doing. So
if I've made profits over, let's say, in the last 6 months, I've been able to have been successful, and then all of a sudden I take a wrong move on one particular day, and then it's all gone. It's
possible, yeah, because that happened for instance, let me take it back to what happened in Nigerian stocks. There are people who have been making money from the stock for 2 years, and in less than a week, when we had a crash in the market, they lost everything. So basically, it can happen. It's not about how long you've been making money. It's about not protecting yourself effectively enough as a trader, you know, for you to lose all your account. Yeah.
Okay, so what could bring about, what are those instances where a trader would encounter that will make him lose that much?
No. It's not even losing that much. It's losing everything. Now, this is the way it works. The major concept is called margin. You have what we call it in trading margin call. You get that call when your broker closes all your open trades and put your account in whatever is left, maybe $1 or $2. And what basically telling you is that you no longer have enough capital to sustain your open trade positions. You know, so you have to close them, because basically if you no longer have sustain it.
And speaking of capital, is it from gains made previously, or does it even with what he has made?
It's possible. It's possible. It's just your capital. It's possible that it's capital plus profit you made.
Okay.
Because it makes some money, but if you have enough capital to sustain your position, what we call a margin call, where your trader, your broker, or your trader system, you have, and how much you need those open positions. requirement, they close it. Then you're dead practically, or you have a
okay. No, it prevent. I see. Probably
it's a semi-trap. Currency market and most markets are left of having and trading, whether it's trading or more. So what goes wrong, I can't.
we've been involved
Yeah.
in having